Welcome back. In this lecture, we're going to go through a past exam paper. The whole reasoning will be to test our knowledge of the concept and principles that we've learned from our previous lectures, right? So the question paper that we're going to go through is the 2019 November exam, Department of Basic Education. And we're going to do question 4, 4.1 and 4.2.3, right? So first thing I'd like to pass to you guys is an exam technique. It's very important for you to identify a financial period, right? Remember, in accounting, you only account for transactions that occurred in that financial period. So it's very important to identify what's the financial period that you'll be dealing with. Number two, you need to know the skeletons or the structure, especially when it comes to preparing the financial statements and the notes. You need to know how the financial statements looks like, where in the financial statements do you find liabilities, what kind of liabilities are there, where do you put your asset, which asset do you put in your income statements, how the structure looks like, etc. That's going to give you more marks. Or then the last thing that for the purpose of this exam is when you are doing questions, you need to put the amounts that have been provided on your maybe pre-adjustment financial statement in order for you to make sure that you are not going to miss out by only focusing on additional information, right? But we'll elaborate more on this concept going forward in our test or exam papers that we'll be going to be dealing with, right? So let's just go to the question paper. So the question paper that was going to delay as elaborated before is the Department of Basic Education, November 2019, right? Which is question 4. Then 4.1, we are told to match column A with column B, right? So far, we're only going to focus on the concept that we've covered in previous lectures. So we've learned about limited liability, what a director is, companies and intellectual property commission, also known as CIPC, right? So try to match 4.1.3 with the column B. So from column B, you can see limited liability, appointed by a shareholder to manage a company. That's not limited liability, that's a director, because we've learned that shareholders are the holders of shares in a company, but they are not involved in day-to-day operations of the company. Thus, they need someone or a group of people to have oversight on the operations and strategies of the company, right, over a certain period of time. So directors is going to be matched to point A. Then number 2 is the body responsible for registration of companies. We have learned in our first lecture that CIPC, or the Companies and Intellectual Property, is responsible in order to register companies in South Africa. Then number 3, number C, is employed by a company to ensure good internal control procedures. So far, we've not learned about that. Indicates that a company is a legal personality of its own. We've learned that limited liability, this is when a company it's got the rights and responsibilities like any other person, right? It can be sued or it can sue, right? So that's what limited liability is. Then since we've covered limited liability, directors and companies commission, we'll just move on to 4.2.3. On 4.2, one thing that we need to realize is that we are dealing with the financial year ended on 8 February 2019. That's what we need to highlight. Why? Because of, remember, we only account for the transaction for a certain financial period. So if the financial year end is 28 February 2019, it means the financial began on 1 March 2018, right? And then we're going to focus on 4.2.3. because the 4.2.1 deals with fixed asset register, and we haven't covered that. 4.2.2 deals with net profit after tax, and it involves adjustments. We've not covered that. We're going to cover that in chapters to come. But so far, we've learned about retained income note and also statement of financial position. But on statement of financial position, we have learned more on owner's equity and liability section. So that's going to be only our focus for this purpose of this lecture, right? We are told to refer information A to H, and so that we can be able to prepare the following on the 8th February 2019. So we just go through the information so that we know what information is going to be applicable in our preparation of retained earnings note and the statement of financial position. Number A, it relates to fixed asset register. We are not focusing on the asset part, so ignore. Then number B, we're given that these are the balance or totals on 28 February 2019. Remember, 28 February 2019 is the year end. So as at the year end, before they are taking into account all adjustments below, we're told there are adjustments below. This way, the totals or the balances. So we are told that the ordinary share capital at this point, it was like 8,152,000. Highlight this one. We've covered ordinary share capital from the previous lecture. We have covered retained income, and we're told that on the 1 March 2018, 1 March 2018 is the beginning of the financial year. Remember, we said the financial year starts from 1 March 2018 to 28 February 2019. So we expect to see opening retained income of 865,300, right? Then we have mortgage loan, Private Bank of 1.7 million and 58,000, right? Then fixed assets, we ignore. Fixed deposit, we ignore. Trading stock, we ignore for now. Net trade debtors, we ignore since we've not covered. For bank, we'll just ignore for now. SARS income tax, provisional tax payments, and we are told that there are 155. This one we've covered in the previous lectures where we've discussed that provisional tax are there or are required by SARS to be paid by companies. The whole reasoning is so that at the end of tax period, when the company determines the current tax due to SARS or the income tax due to SARS, does not have a huge burden of the amount to pay. So these are the provisional tax payments that have been paid so far of 155, right? Then we move on, and the first 4 points, we have been covered the content so far, but we are told that a further 43,000 is owed for income tax. Remember, if something is owed, it means the company has got an obligation or has got a liability. So we expect in our statement of financial position under current liabilities to have SARS income tax liability of 43,000 because we owe this amount, right? Then we move on. We are told in D, about ordinary shares. We are given that transaction happened in 1 March until 28 February 2019. These are within the financial period, right? We are told that on 1 March, remember 1 March 2018 is the beginning of the year, they had 2 million shares that have been issued. Then their book value was 7.6 million. Then on the 1 March 2018, there was 360 shares that were repurchased. Repurchase is another name for share buyback. So don't be confused when you see a repurchase, it means share buyback. There was a share buyback of 360 shares for 410 cents, right? Then we are told that on 1 October 2018, 800 new shares were issued, right? Then on the 28th February 2019, there were 2,440,000 shares, right? So if beginning of the year there were 2 million shares, then from there they bought back 360 shares, then they issued an additional 860 shares. That means this amount is say this one minus this one plus this one must be equal to this one, which is the case, right? Then it means this balance that we see here of ordinary share capital is not the balance at the beginning of the year, right? Remember here, we are told that at the beginning of the year, it was 7,600,000, right? So it means this is the balance as at the year end, right? Because with the available information, we are not told how much these shares were bought at, right? But if it increased, because if it was 7.6 million, now it moved to 8.1 million and 52,000, it means there was an additional shares that were bought, right? So it means this transaction, as you can see that 2 million shares minus 360 shares plus 800 shares is equal to 2.4 million shares. It means it's already taken into account this transaction. So we can conclude that based on this information, this is the closing balance. So straight away, we'll take this amount and put it in the statement of financial position under ordinary share capital. No calculations that are needed, but we'll just see that in our slides when we finish reading this additional information. Then point E, we are told that interim dividends were paid in the September 2018 for 295. So in September 2018, they paid interim dividends, right? So they were paid. It means the company does not owe or does not have a liability to pay this, to pay the these dividends to the shareholders, right? Because they were paid. Whereas they say final dividends of 20 cents per share were declared on 28 February 2019. So it means they were not paid. Then we expect to have a shareholders liability as at 28 February 2019. Remember, dividends is a return to shareholders, right? So they say for every one share that you have, the company is going to give you 20 cents. So on the 28th February 2019, on 28th February 2019, how many shares were there? There were 2,440 shares, but we'll just see that in our slides. Going down, there's nothing that is relevant that we have learned so far. So these ones will just ignore. So I'll just go back to the slides so that we can answer the question. Then go to the slide. Let me just increase the screen, right? Remember, so we'll start with the share repurchase, where this information comes from the question page. This is the information that we've highlighted so that we can be able to use, right? We are told about the share repurchase that on 31 May 2018, there was a share repurchase of 360 shares. They were repurchased at 410 cents. Then on to 1 March 2018, there were 2 million shares in issue and the book value was 7.6 million rand, right? Then that means the book value of the shares at the beginning of the year, it was 380 cents per share. How did we find that? They say 7.6 million divided by 2 million shares is 380, right? So the shareholder, when there was a share buyback, he was given 410 cents per share, whereas the shares had a book value of 380, right? Then it means this 0.30, this 30 cent extra, it was given more to the shareholder. Why? The shares had 380 as their book value, but when they were bought back, they were bought back at 410 cents. So for you not to get confused, let's see what journal entries will be processed by the company in order to take into account this transaction. You can use the journal entry so that you can see which account are affected when we are preparing your financial statements. It's easy for one to be able to follow or not to only account for one leg of the transaction without accounting for the other, right? You can see that, remember we said when there's a share buyback, the company is not receiving cash. The cash is going out. So if the cash is going out, it means our bank is reducing. A bank is an asset. An asset reduces where? On your credit side, right? Then your share capital is going to reduce, right? So we say the share capital is going to be reduced by the book value. We say the book value is 380 and 360 shares were sold. So the share capital is going to be reduced by 1,368,000, right? Then on top of buying back those shares, right, the company paid 30 cents extra. Then we say when the company paid 30 cents extra, that is because of the share buyback. So then it means it paid 108,000 extra, right? That means it's going to be debit share buyback, credit bank because money is going out, right? But because a share buyback is not an expense, but is an account, is an account or a transaction that relates to shareholders, then it's going to be closed off to your retained earnings. If it was debited here, it means it has to be credited here. Then the account that is debited is going to be retained earnings, right? Because of now, the company is giving the shareholders back a certain 30% extra more than the book value of the shares, right? I hope you understand that part. Then the second part is going to be the dividends. We are told that interim dividends were paid in September 2018 of 295, right? Then there were the final dividends per share were declared on 28 February 2019. Then the general interest that's going to be processed when the interim was being paid is going to be debit dividends 295, 200. Remember, cash is going out this time. They paid cash of 295, then it's credit bank, right? Then we say the second part is final dividends are being declared, but they were not paid. So if they're declared but not paid, it means the company has got a liability. So they at 28 February 2019, the company has got 2,440,000 shares and they paid 20 cents. Saying it's 20 cents times 2,440,000, it gives you 488, right? So it's going to be debit dividends, credit shareholders for dividends. Then remember, we said a dividend is not an expense. It's a transaction that relates to owners' equity or that relates to shareholders. Any transaction that relates to shareholders is going to go through to retained earnings. Remember, we said, what did we say about retained earnings? We say retained earnings are those profits that the company made, but it did not declare them as dividends. So those that are declared as dividends, they're going to reduce your retained earnings. That's why your retained earnings are going to be debited by 783,200, which is the combination of your interim dividends and your final dividend. But you'll see that on the note, right? This was just for you to be able to see which transactions are going to be affected, right? So we'll go to how the retained earnings note looks like, and also how the statement of financial position looks like. Start with the retained earnings note. Balance on 1 March 2018, this one is a given, 864,300. Just put it there. Net profit after tax, for the purpose of this lecture, we are not determining it. Why? Because of there were adjustments that we have not covered in our lectures, right? Then there's a share buyback. Remember, we said share buyback, it reduces your retained earnings. And the share buyback that reduces your retained earnings is that extra amount that the company paid to a shareholder. We said the company paid 0.30 cent extra to the shareholder when it bought back those shares, and there were 360 shares that were bought. So it means 108,000 is going to reduce your retained earnings. Then the other thing that reduces your retained earnings is dividends. Dividends, they were interim and final. Just take interim 295, final for 88,000, right? Combination of the two, total dividends going to be 783,200. Then you take your opening balance, you add your net profit after tax, you minus the share buyback, you minus the sum of the dividends, you're going to give you a closing balance. But for this purpose, since we have not determined the profit after tax, we cannot determine the balance as at 28 February 2019, right? But so far, you get your tick marks for share buyback and dividends, both dividends, 1, 2, right? Then, remember, we said ordinary share capital that we've seen there, that 8.1,052,000, it was already taking into account those transactions, right? So there's no adjustment, just put 0, right? Retained earnings, we cannot put an amount since we didn't determine the net profit after tax. But if we put an amount here, this balance must come here. Even if it's wrong, you're going to get an amount because it's the principle that is being tested. Your notes must be equal to the amounts on the financial statement. Then the other one that we're going to see is shareholders for dividends of 488,000 because we have a current liability of 488,000 that needs to be paid to retained earnings, right? Then we are going to look at what you can take away from this question. What you can take away is that share buybacks, they reduce your ordinary share capital based on the book value of the shares before the share buyback, right? So if you see a share buyback, you need to say, what's the book value of those shares before the share buyback, right? Then you're going to reduce your share capital. Number two, if the price of the share buyback is more than the book value of those shares before the share buyback, then the difference is going to reduce the retained earnings, right? Then number three is if the dividend is declared, then there will be a liability called a shareholders for liabilities if they are declared and not paid, right? Then for additional questions that you can test yourself on the same principles that you've covered so far, you can do November 2018 and focus on question 3.2 and November 2017 and focus on November 3.2. What is important is principles. If you understand the principles, you'll be able to do any other question, right? Because of we are testing principles in accounting. So irrespective of the question, principles are the same, right? Then we are coming into the end of our lecture. What we are going to learn in the next chapters is that we are going to learn about adjustment of financial statements, right? This adjustment includes your income received in advance, your accrued expense, your prepaid expenses. We are going to learn about debt management, things like your provision for bad debts, your bad debt recovered, and your bad debts, right? We're going to also cover correction of errors, also the inventory management. We're going to cover in detail the fixed asset register. That's where we talk about the depreciation methods and disposal of sale of assets, right? See you in the next chapter. Thank you very much.